Hello, welcome back once again. Boy, this is going to probably get a little bit ugly here, and I hope I won't cause a lot of people to get upset with me. But we're going to be using a price to free cash flow calculation in order to derive what is a good price to pay for Tesla. And I can assure you that we're already overpaying a lot if we're paying this price over here. Again, if we go according to what the company is making in terms of free cash flow. So this is just one method to evaluate. You could be using all sorts of different methods, discounted cash flows, growth and all that jazz. But I use this one as a quick method, a very quick method to evaluate an about price of what I should be paying for a company. Now, if you're new to the channel, thank you for being here. I hope you're having an awesome day. And please leave a like and subscribe to the channel. You can also join our Discord channel. You can find a link in the description box below. There's a lot of content that I'm coming out with pretty much daily, and I'd love to have you around. So thank you for being here. Let's move on and take a look at the financials of the company, and especially the cash flow statement, which is what we're going to be using here to evaluate how much Tesla is worth today, if we're actually going to be buying stock today. And we're going to be using the last 5 years of data that we have for Tesla over here to evaluate how much we want to be paying for the company. And the way we're going to be doing that is we're going to get an average of the free cash flow that the company has been making in the past 5 years. And usually, I want to be using all these 5 years, but I'm gonna be a little bit more generous here. I feel generous today, so I'm going to exclude these years over here where the company didn't really make any cash and actually lost money in terms of free cash flow, just because they are growing nicely, and so I'm willing to give that to them. So we're gonna use our calculator here, and we're just going to be adding these three values here, these 3 years of free cash flow that we have. It's the most recent data. So we're gonna do 973 for 2019 plus 2711 plus 3483, and that equals $7.1 billion in terms of free cash flow is what the company made in these 3 years. And if we divide that by 3, we're getting a value of 2.389, which is about $2.3 billion a year, is what the company has been making in these past 3 years in terms of its average free cash flow. Now, we are seeing that the company is making $2.3 billion in terms of free cash flow right now. And we want to be discovering how much we are willing to pay for the company. So what we could be doing is setting up a multiple of its free cash flow, this free cash flow that the company is generating a year, and evaluate how much we are willing to pay for this free cash flow that the company is making. Now, typically, if we're looking about companies that grow well and grow nicely, we are willing to give them a multiple of like 20 times its free cash flow. Sometimes even 25 could be okay. Typically, if we're talking about behemoths or strong companies that don't really grow that much, we want to be less than 20, if possible even 15. But here, just because Tesla is a massively growing company, and even though it's a car company and car companies don't enjoy great margins, I'm willing to give it a multiple of 20. So if I multiply this free cash flow with 2020, I'm getting $47 billion in terms of the expected market cap that I'm willing to pay for. Let's say $48 billion for its market cap. But currently we are sitting at a market cap of $900 billion, almost $1 trillion. So this is massively different than what we would want it to be. And so we can divide the current market cap to this value, let's say 48. So let's do 906 and divide by 48, which is what we want. And we're gonna see that the current market cap is almost 19 times more than what we want to get, which means that in order to calculate how much we are willing to pay based on this multiple, 20 times multiple of its free cash flow, what we want to be doing is divide this current stock price by this multiple, 18.8. So let's do 877 divided by 18.8. And we're getting a value of $46.6 per share for Tesla. Now, obviously, this is just one method of evaluating how much we would be willing to pay. And if you define a free cash flow or a discounted cash flow model, you are probably going to get a little bit of a higher value, but probably not that much higher, just because the company is still not making a lot of cash flow and it's insanely overvalued for what it's actually making. It's sitting at almost $1 trillion and it's making $3 billion a year in terms of free cash flow. That sounds weird, right? And it is weird. It's a massive multiple. It's more than 300 times a year of its total market cap. So we can use this quick method just to quickly get a value of the stock that we would be willing to pay today in order to enjoy 20 times multiple free cash flow, which is normal and expected for this kind of company that's kind of growing, but it still has its headwinds. So we are willing to pay 20 times multiple for this one. Hopefully that makes sense for you. I am actually preparing software that I'm gonna be opening to everybody, that's all of you, and you would be able to automatically calculate all this and even much more complex scenarios with discounted cash flows. And there's gonna be a lot more. You can join our Discord channel, and there will be news and ways on accessing the application when it's going to be live, and it's gonna be a web app. And if you enjoyed this video, again, please like it, because that really helps a lot. And if you enjoy the content, you can also subscribe. I'd love to see you around. And if you did enjoy this one and you are interested in learning how much Alibaba is worth right now, I think you should be, because it's very, very interesting, the price that comes out if you use the similar model on Alibaba, the same model on Alibaba. You can watch this video, and I'm leaving a link on your screen. You can just click and watch it right now. And I'll see you in the next video. Bye bye.